Most California landlords who lose security deposit disputes didn't lose because their tenant was right. They lost because their own paperwork fell apart under cross-examination. Not the tenant's story, yours. Your records, your numbers, your ledger that either didn't exist, couldn't be printed, or had 3 unexplained gaps that a judge quietly noted before ruling against you. You're not losing to bad tenants. You're losing to bad documentation. And the gap between what you're keeping right now and what California courts actually require is costing self-managing landlords an average of $4,000 per dispute, sometimes more. In the next 12 minutes, you're going to understand exactly why, and you're going to walk away knowing how to fix it in 30 minutes flat, using nothing but a spreadsheet you already have access to. Let's get into it. Here's the uncomfortable truth about small claims court in California. It is not a contest of facts. It is a contest of evidence. A tenant who owes you $1,400 in back rent and unpaid late fees can walk out of that courtroom with your security deposit if you cannot produce a coherent, chronological, mathematically traceable record of every dollar that moved between you. You probably think you have that. Most landlords do. They point to their bank statements, their Venmo transaction history, their PayPal exports, or whatever their property management app generates. And then a tenant's attorney, or even the tenant themselves representing pro se, asks one simple question. Can you show me, line by line, how you arrived at this balance? And the records collapse. Bank statements show deposits. They do not show what rent period a payment applied to. They do not show whether a payment was partial. They do not show what late fee was assessed, when it was assessed, and under what lease provision. A Venmo screenshot shows a money transfer. It does not constitute a rent ledger under California law. The documentation gap is not a technology problem. Self-managing landlords who use sophisticated property management software have the same problem, because most app exports are formatted for internal tracking, not courtroom presentation. They're missing columns, missing running balances, or they're PDFs that look like they were generated 5 minutes before the hearing because they were. The landlords who win disputes consistently, reliably, are the ones who treat their rent ledger the way a bank treats your mortgage account. Every transaction, every date, every balance, updated in real time, printed on demand, and structured so that any third party can follow it without your explanation. That third party is a judge, and they're going to give you about 90 seconds to make your case legible. California Civil Code Section 1950.5 is the statute that governs security deposits for residential rentals. You've probably heard of it in the context of the 21-day return requirement. You have 21 calendar days after move-out to return the deposit or provide an itemized statement of deductions. But that's only the final act. The documentation that supports those deductions has to exist long before day 21. Here's what most landlords miss. Civil Code 1950.5 doesn't just require an itemized deduction list at move-out. It requires that your deductions be supported by actual receipts, invoices, and records. For unpaid rent deductions, that means you need a document that proves the rent was unpaid, that it was owed under the lease terms, and that your accounting of what the tenant owed versus what they paid is accurate and verifiable. Now here's where it gets interesting. In small claims court, the burden of proof sits with the party making the claim. If you're claiming a tenant owes you $1,800 in unpaid rent and you're withholding their security deposit to cover it, you are the one making the claim. You need to prove it. The tenant doesn't have to prove they paid. You have to prove they didn't, or that they paid less than the full amount. Without a rent ledger, you cannot do that. A lease agreement shows what was owed. It does not show what was paid or what balance remained. You need both sides of the equation, and you need them documented contemporaneously, meaning recorded at the time of each transaction, not reconstructed after the dispute begins. California courts, particularly in high-volume small claims departments in Los Angeles, San Francisco, and San Diego, have become increasingly skeptical of landlord documentation that appears assembled after the fact. Judges see the same reconstructed spreadsheets and bank statement printouts constantly. What stands out, what actually wins, is a running ledger with consistent formatting, real-time entry dates, and a balance column that ties to your lease terms. One more legal point that most self-managing landlords don't know. California Civil Code 1950.5L allows courts to award tenants up to twice the security deposit as a penalty if the court finds the landlord acted in bad faith. Weak documentation doesn't just cost you the dispute, it can look like bad faith even when it isn't. A court-ready California landlord rent ledger has 8 columns, not 3, not 5, 8. Here's exactly what they are and why each one matters. Column 1, transaction date. The actual calendar date you received the payment or assessed the fee. Not the rent due date. Not the date you logged it. The date the money hit your hand or your account. Column 2, transaction type. Is this a rent payment, a partial payment, a late fee assessment, an NSF fee, a utility chargeback, or a balance adjustment? Label it explicitly. Courts do not like to guess. Column 3, description. One sentence. Rent for October 2024. Received via personal check number 1042. That's it. Specificity protects you. Column 4, amount due. What was contractually owed on this line item per your lease? Column 5, amount received. What you actually received. If the tenant paid $800 on a $1,500 rent, this column shows $800, not $1,500, not $800. Column 6, late fee applied. A separate column not buried in the description. If your lease allows a late fee after a 5-day grace period and the payment came in on day 8, this column shows the fee amount. Separately. Always separately. Column 7, running balance. This is the column that wins cases. It's the cumulative amount owed at any given point in time, accounting for all prior payments and all prior fees. It should update with every single row. If a tenant's balance was $400 from a partial payment in September, and they then paid full rent in October, the running balance reflects that correctly. No guessing, no ambiguity. Column 8, payment method. Cash check number, Venmo, Zelle, money order number. If it ever comes up that the tenant claims they paid cash and you deny it, this column is where your defense lives. But wait, there's a catch. Partial payments. This is the single most dangerous ledger scenario for California landlords, and most of them handle it wrong. When a tenant pays you $800 on a $1,500 rent, and you accept it without a written notation of the remaining balance owed, you have created a legal gray zone. In some dispute contexts, accepting partial payment without an explicit reservation of your right to collect the remainder can be argued as satisfaction of the debt. California courts have not ruled on this uniformly, but the risk is real enough that your ledger needs to document it unambiguously. The correct way to handle this: accept the payment, record it as a partial payment in column 2, note the amount received in column 5, leave column 4 showing the full amount due, and let column 7 show the remaining balance clearly. Then, and this is non-negotiable, send the tenant a written notice, even a text message, confirming you received a partial payment and that the remaining balance is still owed. Keep that message. It becomes an exhibit. Tracking rent payments as a self-managing landlord doesn't require software. It requires discipline. 1 row per transaction, every time, same day. Let's do the math, because this is where abstract advice becomes money in your pocket or money out of it. Scenario 1. Your tenant moves out owing due months of unpaid rent at $1,800 per month. That's $3,600. You have a $3,600 security deposit. You withhold the full deposit, send your itemized statement within 21 days, and the tenant files a small claims dispute claiming they only owe 1 month. Your bank statement shows 2 large gaps in deposits. But during those 2 months, the tenant made 3 partial payments totaling $1,100. Those payments hit your account, and without a ledger, you cannot show what period they applied to, whether they were applied to rent or to a prior balance, or how the running total got to $3,600. The judge sees 3 deposits in the tenant's favor, and no coherent accounting on yours. Award, split. You get $1,800. You lost $1,800 because your math wasn't documented. Scenario 2. You charged $150 in late fees over 6 months. The tenant disputes every one of them, claiming they paid on time. Your evidence is your lease, which says late fees apply after the 5th of the month, and your memory. Their evidence is 6 screenshots showing Zelle payments, none of which have timestamps readable enough to establish the date. With a ledger, you would have the receipt date in column 1, and the late fee assessment in column 6 for every instance. Without it, you're arguing memory against screenshots. Courts default to the tenant. You lose $900 in legitimate late fees. Scenario 3, the one that crosses into penalty territory. You withheld $2,200 for unpaid rent and cleaning, sent your itemized statement, and your documentation is thin. The tenant's attorney argues bad faith. The court, unable to verify your rent accounting, finds your deductions unsupported, and awards the tenant twice the deposit amount as a penalty under Civil Code 1950.5L. That's a $7,200 swing, $3,600 you returned, plus $3,600 in penalties, on a dispute you were factually right about. Add those three scenarios up and you're looking at losses between $1,800 and $10,000 on documentation failures alone. The median across all three is right around $4,000. That's not a hypothetical. That's the math of what happens when your records can't speak for themselves. You do not need to buy software. You do not need to pay for a property management platform. You need Google Sheets, Excel, or even a printed paper ledger if that's what you'll actually maintain. The format matters. The consistency matters. The tool is secondary. Here is your 30-minute setup protocol. Minutes 1 through 5, open a new spreadsheet. Create your 8-column headers exactly as outlined. Transaction date, transaction type, description, amount due, amount received, late fee applied, running balance, payment method. Bold the headers. Freeze the top row. Done. Minutes 6 through 15, backfill the current lease. Start from the first month of the current tenancy. Enter every rent due date as a row. Use your bank statements to fill in what was received and when. If you have gaps or uncertainty, note them as amount unverified bank statement only in your description column. This flags them as weak evidence, which is honest, and it tells you where you need to shore up your records. Minutes 16 through 25, enter every late fee you've assessed. Go back through your texts, emails, and any written notices. If you assessed a fee verbally and never documented it, enter it with a note, oral notice, no written confirmation. Again, honest documentation of a weak record is better than silence. Minutes 26 through 30, set up your running balance formula. In Excel or Google Sheets, your running balance column is simply the prior row's running balance, plus the current row's amount due, minus the current row's amount received, plus the current row's late fee applied. Lock that formula down and drag it through every row. Your balance will update automatically with every entry going forward. Now here's the part most landlords skip, and it's the part that actually makes this document court admissible. Print it. Not as a PDF you generate the day before court. Print it today, sign it and date it, then print it again at the end of every month. Sign and date each printout, and keep the stack in the tenant's physical file. A stack of monthly printouts with sequential dates shows contemporaneous record keeping. It's nearly impossible for a tenant to successfully argue that you fabricated them. For tracking rent payments as a self-managing California landlord, that physical paper trail is your strongest evidence. Courts give it more weight than any app export because it demonstrates an ongoing practice of documentation, not a one-time reconstruction. One final thing, every time you accept any payment, especially a partial payment, text the tenant a confirmation within 24 hours. Something simple. Received $800 toward October rent of $1,500. Remaining balance of $700 still owed. That text, attached as an exhibit alongside your ledger, is a 2-document stack that almost nothing can beat in small claims court. Recap: a California landlord rent ledger is not optional. It is the evidentiary backbone of every security deposit dispute, every late fee claim, and every unpaid rent deduction you ever try to make stick in court. Your ledger must have 8 columns. It must be updated at the time of every transaction. Partial payments are the highest risk entries, and they must be documented with both a ledger entry and a written confirmation to your tenant. A bank statement is not a rent ledger. A property management app export is probably not a rent ledger. A structured, consistently maintained, printed and signed spreadsheet is a rent ledger. The math is not complicated. $4,000 is the median cost of documentation failure in a California security deposit dispute. 30 minutes of setup today eliminates that risk entirely. Build the ledger. Keep the ledger. Print the ledger monthly. When a dispute comes, and in California it will come, you will be the landlord whose paperwork is unassailable. Powered by LeaseBase intelligence.